Yo, what's up, guys? Just gonna be quickly reviewing this week's price action so far. Nothing too crazy. So, obviously, Monday we accumulated, not too much going on Monday. Tuesday, we had a big expansion move during our AM session, which created the manipulation for the week. As you can see, quarter two was our manipulation. So, we're gonna take this liquidity sweep and project it higher. Obviously, FOMC, we added this distribution higher during quarter three and ultimately resulting in today's price action. So now, what can we say about today's price action? Well, 3.5 to the fourth standard deviation, that's where we should expect either a retracement or a reversal. So I was just expecting retracement, nothing too crazy. Regardless of that, we traded into the 3.5 to the fourth standard deviation into this zone, I guess you can say here. Now let's drop down to the 3 minute, which is where I took my trade today. So I was at the gym when I was actually in the parking lot when I was looking at the charts, and this was early in the morning, and I said I wasn't going to trade today. But when you see a setup this valid, it's kind of hard not to place the trade. So we're going to focus on specifically this portion of the chart here. So just between here and here, this consolidation, as you can see here, it's not really a consolidation when you really pay attention to what's going on. So remember what we had up here. This is the 3.5 to the 4. And what are we having here? So we have a liquidity sweep, right? Now this liquidity sweep, doesn't mean much until you have a distribution leg, which is this right here. So this leg right here, what does this indicate? Okay, two things. We are not only expanding lower with displacement, it's not just like, we're not chopping lower. It's just one big candle close, but pay attention to this fair value gap right here. That's a bullish fair value gap, right? I could say the same for like the 2 minute, if you go on the 2 minute, we have one here. But I actually got this from, if you guys follow him on Twitter, Dodgy, he said if you want to find a clean inversion, you got to find a leg with only one fair value gap. So on the 1 minute, we have one, two, three, about four, so not on the 1 minute. On the 2 minute, we have about three. On the 3 minute, perfect. Okay, we have one. So now that we have one, what are we going to look for? So I personally look for two things when I'm going to be going either long or short or entering a trade. So it's going to be a breaker block model. So you have an order block, and you're looking for the order block to be closed below. So now if we get rid of the inverse and we just pay attention to the order block, this should technically hold right here. This order block should technically hold. And even on a lower time frame, if you go on the 2 minute, it's the same thing. Maybe on the 1 minute, it's the same thing, okay? But what happens when you close below the order block? For example, here, or when we displace below it here, this becomes a breaker block. Change in the state of delivery happens. It occurs. It's considered a market structure shift in simple terms. But how, instead of, selling, going short here and catching a minimal part of the move, how can you really capitalize on this move? And like I said before, paying attention to the inverse fair value gap. Now, the inverse will indicate two things. You have a bullish PD array being disrespected for a bearish scenario, and vice versa for bullish. But this is a bearish scenario, so we have a bullish PD array, which is this bullish fair value gap, being displaced below and closed below. So now what will happen when we retrace back into it? What does it become? It becomes an inverse, but we have a fair value gap overlapping with it, so that's actually a BPR now, a balanced price range. So that becomes a BPR. You could call it whichever, inverse BPR. My entry was not at the BPR. It was actually at the close of the displacement candle. So my entry was here. Now, this entry is much better than getting filled down here with the breaker. So I'll take that any day of the week. So I did catch a pretty deep retracement back into here, but like Dodgy says, if it closes back above either the BPR or the inverse, if it closes, like if this candle closed right up here, you close the position because more than likely this was just a retracement into discount of this price leg here, and we're going to keep heading higher. But as long as it doesn't close, we had a pretty deep wick. We didn't close above. You should be fine, and then that's where you got your displacement heading lower. Now, where will you take profit? And that depends on how many contracts you go. So on this trade, since I was away from my setup, I went one contract. I didn't want to risk too much. If I was at my setup, I probably would have gone two, but since I wasn't, I didn't want to get, having to manage positions on, my phone is it's a bit more complicated than, on my PC. So I went one contract. I could have shorted, I could have exited here. And this is your ideal first partial. You want to take your first partial at internal range liquidity. So internal simply being from this price leg, where is your internal low? Well, we have external here and external up here. So internal would be here. Let's mark that out there. So this would be your first take profit. Now, if that's ideal for you, that's perfect. That's a solid 5 and 3 ticks, 5 points and 3 ticks. For if you want to become consistent and you don't mind having, I guess you can say, small winners, then consistent things like this, 5 points, 6 points every day, you're gonna grow a lot. All right. However, if you want to get like maybe a little bit more juice out of the move, then what you can do is at the first take profit where you would have taken profit with one contract, now you move your stop loss to break even. So essentially, once price hit here, my stop loss instantly moved to break even here. We almost retraced back into it on this wick. My stop loss was here. This wick almost stopped me out. However, on the 1 minute, this was actually a setup. This was a model. One more time. Same model like up here, just on a smaller scale. We had liquidity, internal liquidity being taken there. All right, with an order block right above it. All right, pay attention to that order block, liquidity sweep, and once again, what is this? An inverse, right? Did we close below it? We closed at it, but we actually closed, at the bottom portion of it. So I would consider that a candle closure below. Maybe on a lower time frame than the 1 minute, there was a close below, but I would consider this to become an inverse at this point, and you should see speed through this fair value gap since it's being disrespected. So once again, you have a breaker just like before, right there, and you could either short, depending on how aggressive you want to look at it, you could short at the inverse or you could short once price comes down below the breaker. My exit was actually, I believe it was right around here. I was targeting these equal lows here, but notice how we didn't come down into it. We ended up retracing. I was watching it on the 3 minute. We ended up retracing, tapping into, if I get rid of the 1 minute here, we tapped into this 3 minute imbalance right there. Retraced again, but once I saw price respecting the rejection block, this wick right here, that's a rejection block. Once I saw price respecting the rejection block and not closing below or at the 50%, I exited there. I didn't get my extra 2 points that I was looking for, but what happens here? Price retraces back into premium of this leg with the order block. And that order block was actually our entry. So if we would have held, we would have gone and stopped out break even and missed out on profits. So depending on where your risk to reward is, if you don't mind going break even or maybe, putting your stop, leaving your stop where it is, you would have gotten full TP. But I'm willing to risk losing out on 2 points than to lose out on almost 10. Yeah, quick little trader recap for today and kind of just like a weekly overview of how I projected this trade and what I was really looking for. Here's the trade, guys. All signaled in the Discord, by the way. So this is where I have my commentary. And this was actually, like what I said, I told myself I was going to trade today, currently at the gym. And I was already in the trade when I signaled it, but I signaled it when we rebalanced the 3 minute right here. So I said a re-entry here is valid if you're not in yet. And as price was falling, I kept on updating it. So price was this is where it was one tick away from TP, and I said you're up right now. However, once we made that wick and we rebalanced it, I actually exited there, full position closed. So that's actually where I exited because that wick didn't look too promising, and I was also targeting 2 to the 2.5. And then after at about 8:10, I said, here's where I think the draw is, no more trades, enjoy your profits. And that was the equal lows there. We made a relative equal low, which that was our exit there. And then about 20 minutes later, draw on liquidity met. But yeah, here's the business, by the way. So entered short here. This candle closed there. Entered short at the close of that candle. I ate up a very good 7 points. However, no close above the fair value gap. And exited right there. But yeah, guys, I'll catch you guys next time. I'll try to do these reviews daily just so there's more information out there on what I look for and what I look at. And I'll catch you guys next time. Peace.